Hi, I'm Chad, and this video will be an overview for investing in industrial real estate. It starts off fairly simple, but as you'll soon see, the process is much more elaborate than buying a residential investment property. The first step will be to get an indication of how much you can afford. This can involve discussions with your accountant and lender with the goal of getting a high-level indication of what will be within your budget. The next step is to identify what type of property you're looking for. Industrial real estate is a fairly broad term, so I'd recommend breaking it down into three subcategories: warehousing, manufacturing, and flex. I have another video explaining these in more detail, but as a short overview, warehousing properties are buildings where things are stored, manufacturing properties are buildings where things are either made or worked on, and flex properties are buildings zoned industrial but used for purposes other than warehousing or manufacturing. A few examples can include self-storage, bottle depots, churches, pure office space, and perhaps even unexpected uses like art galleries or car dealerships. Once you've narrowed in on what type of building you're looking for and you have an indication of your budget, you can then start your property search. It's helpful if you can find a real estate broker who specializes in industrial or investment properties in your local market, as they can likely find options that aren't publicly marketed. But whether you do it yourself or utilize a broker, you'll want to evaluate as many options as possible, but be prepared that even in some hot markets, it might be difficult finding even a single suitable option. In that latter scenario, you may just have to wait to be patient to find the right opportunity to come along. But back to the process, let's assume there are options. It may be worth looking at all of them or even shortlisting it down to the properties you feel would be the best fit for your investment portfolio. Once you have the list, you'll want to start gathering financial information about the properties and arranging to tour them. At the beginning, you'll want to obtain a rent roll showing the list of the tenants and their lease terms, as well as any reports that might be on hand. I'll talk about this more in a moment, but if the property has an issue, it could save you a lot of time and frustration by catching that early. An example would be a roof report showing the roof needs to be replaced. This can be a huge expense, so knowing of it beforehand can be quite helpful. Every investor will have a different approach for how they conduct their analysis of the property as well. It can range from a large institutional investor running a detailed and comprehensive discounted cash flow analysis where they calculated projected internal rates of return, cash-on-cash returns, equity multipliers, and a host of other financial metrics, all the way down to the first-time investor who simply wants to know the rental income, will service the debt, and perhaps provide a bit of extra cash flow. Personally, I lean heavily towards running a sophisticated analysis, and I feel it's well worth the time developing a solid understanding of these concepts before looking to invest. But regardless of what path you take, if you're obtaining financing, just note that the lender will have a bare minimum set of requirements. I'm going to list the main reports you'll require with the rough estimates of costs in a moment, but note that depending on your specific market, these costs might be higher or lower. The first three reports you'll need to get are a building condition assessment, an environmental site assessment, and an appraisal. A BCA is a detailed inspection of the property, including mechanical and electrical systems, structure, roof, parking lot, and so forth. It will also include a timeline of work that will need to be completed in the near future with estimated costs. A BCA can range in price from $2,000 to $10,000, depending on the size of the property and the company that conducts the report. Next is an ESA, and this can become very complex if problems are identified, so I'll just talk about the first two right now. A Phase 1 ESA includes a physical inspection of the property combined with a historical record search to determine if there's any warning signs of contamination. Ideally, you're looking for a report that says no further tested is recommended. If the report does recommend further testing, however, you'll need to move on to a Phase 2 ESA, in which soil samples are tested in a lab to see if there's problematic contamination. If there is contamination, the situation becomes significantly more complicated, so be prepared to either walk away from the property or have multiple conversations with the seller and the environmental company to determine how it might be handled. A Phase 1 can cost around $3,000, where Phase 2 can be somewhere in the $10,000 to $20,000 range, and sometimes even higher. An appraisal of an industrial property is much more elaborate and detailed than a residential property, so you can expect it to take longer and cost more. I'd ballpark $2,000 to $3,000 for an appraisal. Some of these reports might be available from the seller, but check with your lender if they're valid. The lender might have an approved supplier list, and the reports usually need to have been done fairly recently to be valid. You'll also want to have a lawyer involved in this due diligence process, as they'll be helpful with a title review, conducting a records search, and reviewing any necessary leases or contracts associated to the property. At a minimum, I'd like to have 45 days of conditions, but depending on what comes out of the reports, it can take even longer to confirm your financing. While these reports and the legal review are underway, I'd stress the importance of regular communication with the lender. Their underwriting process will involve a thorough review of all these reports combined with your ability to support the loan. In other words, this is a lengthy and involved process, and even one small delay can set timelines back significantly. An additional point I'd like to stress is to take into consideration the future resale value of the property. For example, let's say it's a building with low ceiling heights and the tenant in there doesn't require anything higher. The building might fit that tenant's needs today, but it's worth going through the exercise of estimating the financial impact this could have down the road if or when the tenant leaves. Industrial real estate can be a great investment vehicle, but it can also come with a considerable amount of downside risk. This leads to my next point, which might sound obvious, but I'd emphasize here that you don't necessarily need to buy one of the properties you shortlisted. Perhaps you have time on your side, and you might be better off waiting until the right property comes along instead of settling on something you're not fully sold on. This is a complex process, so you can see why I strongly recommend having a team on your side. Start with your broker, lawyer, and lender actively involved in the process, and be prepared to bring in other consultants when required. Whenever I have to make an important decision, here's a mantra that I always revert to. Make the best decision I can with all the information I have available. I hope this video helps you get prepared to do the same. Thanks for watching. Catch you in the next video.